Picture this scenario. It's 2 a.m., you're lying in bed and you can't sleep. Your phone buzzes. Email notification. FTA audit notice. Action required. You've been doing that for years, but there's always been this one question in the back of your mind. Are we actually doing this correctly? If you're managing VAT across multiple companies, healthcare, pharma, real estate, FMCG, and you're not 100% confident, then basically this video is for you. My name is Suhail, and our team specializes in making UAE businesses VAT safe. We have over 12 years of experience in the UAE. We've been working in this space since VAT implementation back in 2018. Our team has worked on 100 plus M&A transactions, led e-invoicing implementations, and we've seen every type of VAT complexity you can imagine. And here's what we have learned. Listen to this carefully. Most businesses are not non-compliant because they don't care. They are non-compliant because the system itself is broken. The approach is broken. So today, what I'm going to do is to walk you through the exact framework our team uses, the same framework that has helped businesses avoid hundreds of thousands up to millions in penalties. More importantly, it's helped finance directors actually sleep properly at night. The framework is simple. Diagnose, validate, systemize, document, monitor. DVSDM. But first, let me tell you about someone. Let's call him Fayaz. Fayaz is an executive director of finance. He's responsible for a diversified group: healthcare clinics, pharmaceutical distribution, FMCG retail, real estate holdings, and revenue is $20 million and above. Now, Fayaz is excellent at his job. Financial reporting, board presentation, corporate tax, he's got it handled. But VAT is a different beast altogether. See, the thing is, each of these entities has different VAT treatments. Healthcare is mainly zero-rated transactions, but there are some standard-rated and exempt transactions. Sometimes all three in the same transaction. Pharma has import VAT, reverse charge mechanism, designated zones. Real estate has the 3-year rule, commercial versus residential, first supply versus subsequent supply. It's completely complicated. And here's the reality. Fayaz's team is not a VAT team. They are a finance team. So what do? Two things. Number one, they outsource to consultants. And the consultants, they fix the immediate problem. They file the return. They answer that one question. But they don't build a system. They don't transfer the knowledge. They just band-aid basically. And number two, and I see this happening more and more, the team just uses ChatGPT for VAT decisions. No documentation, no structure, no real confidence in what they're doing. This creates what I call VAT uncertainty. Let me tell you, VAT uncertainty is expensive, not just financially expensive. Though penalties can be 14% of the transaction value, which on $20 million adds up very fast, it's also emotionally expensive. It's that constant tension that what if keeps you awake. It's knowledge that you're one audit away from serious trouble. And now on top of that, there's e-invoicing coming. January 1st, 2027, another complexity, another deadline, another tension. So the question is, why does this happen? Why do smart, experienced financial professionals struggle with VAT? Basically, I boil it down to 3 reasons. Number one, VAT is not taught properly, it's discovered. Unlike accounting or core finance, which you study systematically, VAT in the UAE is relatively new. There's no 30-year history of institutional knowledge. The legislation is changing, court cases are still being decided, and most finance people are still learning while they're doing. Trial and error. And trial and error with tax, a very risky approach. Reason number 2, VAT is transactional, not conceptual. The concept of VAT, you can understand in one afternoon. I've even made a video about it. Input tax, output tax, and the difference is what you pay. Simple, right? But VAT compliance is not about concepts. It's about specific treatment of this particular transaction with this particular customer in this particular scenario. And when you're processing thousands of transactions across multiple entities, as they say, the devil is in the details. Reason number 3, VAT requires cross-functional clarity. This is what most people miss. And VAT is not just a finance problem. It's also a contracts problem. It's also a legal problem. It's an operational problem. When your sales team is structuring a deal, when legal is drafting a contract, when procurement is onboarding a vendor, VAT implications are there in every decision, but nobody is coordinating. Finance team doesn't know what legal agreed to, legal doesn't know what finance needs, operation doesn't know what either team is doing. And the result, complete chaos. So, what's the solution? Over the years, our team has developed a framework. It's simple in concept, but very powerful in execution. Same framework we've used with diversified groups, real estate companies, healthcare providers, e-commerce platforms. We call it DVSDM Framework. Okay, diagnose, find the gaps, validate, confirm what's right, what's wrong, systemize, build repeatable processes, document, create clear guidelines, monitor, keep it working over time. DVSDM. Now, the thing is, this is not about making you a VAT expert overnight. That's not realistic. This is about building a system that makes VAT predictable, documented, and easy for your team to follow. Let me walk you through each step with real examples. Step number 1, diagnose. This is where most consultants fail completely. They jump straight to solutions without understanding the full picture. In the diagnose phase, what we do is map how money actually flows through your business, not how it's supposed to flow according to your organization chart, how it actually flows in reality. Let me give you an example. We have worked with a healthcare group. They had clinics, pharmacies, diagnostic centers. On paper, everything was separate, very clean, very organized. In reality, the scene was totally different. The clinic was lending equipment to the diagnostic center. The pharmacy was giving free samples to clinic doctors. The diagnostic center was providing discounted rates to clinic patients. None of these was documented properly. None of this was priced correctly from a VAT perspective, and all of it created VAT implications. So, how was this solved? Everything was mapped, every flow, cash flows, barter transactions, free supplies, intercompany charges, everything from both finance perspective and legal perspective. Because here's the thing, when finance calls a recharge and what legal put in the contract might be two completely different things, right? And the FDA doesn't care what you meant to do, they care what you actually did. The output of this phase, a complete transaction map, every entity, every relationship, every flow, no assumptions, just facts. Step number 2, validate. Okay, now we know what's happening. Next step, determine what's right, what's wrong, and how to fix it. This is where our team's deep VAT expertise comes in. Because the thing is, VAT is not black and white, it's interpretive. Two consultants can look at the same transaction and give you different answers. We have seen this happen multiple times. In the validate phase, we go through every transaction type and provide a clear deliverable. This is compliant, you're good. This is non-compliant, here's why, and here's exactly how to fix it. This is a gray area, and here's our position and our justification. For example, we worked with a real estate group. They were providing free property management to tenants who signed long-term leases. They thought free means no VAT, no supply happening. Wrong, completely wrong. Free supplies are still supplies from a VAT perspective. They still have VAT implications. The question, what's the value? Is this a discount on the rent? Is it a separate supply? Is it even a supply for consideration? Our team validated this. We researched the legislation, we looked at FTA guidance, FTA public clarifications, everything. We built a position, and critically, we documented why we took that position, the reasoning. Because in an audit, saying we did what the consultant told us is not a defense. Here's our analysis, here's our justification, here's why the position is reasonable under law. That stands up in front of FTA. Step number 3, systemize. Now here's where it becomes practical. You can have the perfect VAT treatment on paper, beautiful analysis, but if your team cannot implement it in their daily work, then basically it's useless, no benefit. In the summarize phase, we take those validated treatments and build them into your actual workflows. We redesign processes to make them practical, repeatable, and mistake-proof. Now the example of the healthcare group that I mentioned earlier. What was done? Decision trees were created. Very simple. If a patient scenario looks like X, then follow path A. If it looks like Y, then follow path B. If you're unsure, pause and escalate. Clear instructions. Templates were built, standard invoice language for exempt supplies, standard contract clauses for zero-rated exports, standard documentation requirements for input tax claims. Checklists were created. New vendor onboarding, here's your VAT checklist. New product launch, here's your VAT checklist. M&A deal? Here's your VAT checklist. The goal is not to make everyone a VAT expert. That's not realistic. The goal is to make VAT decisions systematic. So your team knows exactly what to do every single time. No guessing. And critically, it was tested. Real scenarios, finding the edge cases, redefine the system until it worked in the real world, not just theory. Number 4, document. This is the step most businesses completely skip, and it's the step that costs them heavily in an audit. In the document phase, we create go forward guidelines for both finance team and legal team. Now, this is not a 200-page VAT manual that nobody will read. That's not useful. This is practical usable documentation. VAT playbook, treatment guidelines for each type of transaction, decision authority matrix, who can approve what decisions, escalation protocols, when to pause and get expert help, audit tail requirements, what documentation to keep and for how long, E-Invoicing Readiness Guide, how to prepare for January 2027 deadline. Here's why this matters. Think about it. In 3 years, our Fayaz might not be the finance director anymore. Someone new comes in. If the VAT knowledge exists only in people's heads, you're starting from zero, starting again. But if it's documented, the next person has a foundation. The system survives beyond individuals. This is very important. Coming to step number 5, monitor. The final piece, keeping the system working over time. See, VAT legislation changes. Your business changes, new products, new markets, new entities. What worked last year might not work this year. In the monitor phase, we set up ongoing mechanisms, quarterly VAT health checks, review a sample of transactions to ensure VAT treatments are still being applied correctly, legislation update alerts. When FTA issues new guidelines or clarifications, assess the impact on your business. Annual review system. Once a year, sit down and ask, what's changed? What needs updating? Now, this is not about creating dependency. That's not the goal. This is about building monitoring into your culture, making VAT a regular part of your compliance rhythm, not a crisis you deal with when FTA comes knocking. So, what does all of this look like in practice? Remember our Fayaz. After working through the framework, here's what changed practically. Before, VAT decisions made by ChatGPT and gut feel. No documentation of positions. Consultants fixing surface problems only. Constant anxiety about potential audits. E-invoicing deadline looming with no clear plan. After, clear and documented treatment for every transaction type. Finance and legal teams aligned. They're on a single page. Repeatable processes that don't require deep expertise to execute. Audit-ready documentation. E-invoicing implementation roadmap in place, and more importantly, Fayaz sleeps at night properly. Now, is their VAT perfect? No, because no business's VAT is perfect. The legislation itself is evolving. But is it defensible? Absolutely. Is it systematic? Yes. They can explain their positions 100%. And that's the difference between VAT uncertainty and VAT confidence. So look, if you're a finance director or a CFO managing VAT across multiple entities and any of this resonated with you, here's what I'd suggest. Drop a comment below with your biggest VAT challenge. What's the thing that keeps you up at night? What's the area where you're not 100% confident? I read every comment and I'll give you my honest take on what you should focus on first. No sales pitch, just practical guidance based on what we have seen work. And remember, you've built an incredible business. You have navigated complex markets. You have grown revenue. You've created value. VAT should be systematic, not stressful. Diagnose, validate, systemize, document, monitor. That's the framework. If you're feeling that your VAT is messy in your organization, I've made a video where I break down the 3 simple reasons why VAT feels messy in an organization. You can watch it here. Thanks for watching. I'll see you there.